Yields back. The gentleman from Iowa, Mr. Nunn, who's also the vice chair in the subcommittee on is also the vice chair of the subcommittee on national security, illicit finance, and institutions, now recognized for 5 minutes.
Well, thank you, Chairman Stile. I believe not only is this an important hearing to hold, but to evaluate where we're going in the future. We all know over the last decade, innovators have built a powerful decentralized network that are transforming how our country operates. Digital assets are going to open the door to endless possibilities for anyone in both the financial and, candidly, the non-financial services, and provide possibilities for economic growth domestically produced right here in the U.S. I am proud that last week Chairman Stile led meaningful steps towards clarity by passing the STABLE Act. Today, we turn our focus to the broader digital asset market. As a member of both the House Ag Committee and the Financial Services Committees, I've had the privilege of working with both the CFTC and the SEC for the last 2 years. In my home state of Iowa, we know rural commodities very well. Corn, soybean, hogs, the CFTC does a great job at these things. Equally, in downtown Des Moines, we have our banking industry that knows very well stocks, bonds, and things that the SEC does very well in. Unfortunately, we've had an SEC chairman for the last 4 years that believes everything, maybe other than Bitcoin, should be traded like an SEC stock or commodity, or a stock, something that is a vast overreach of regulatory power by the SEC and actually stifles innovation. So last Congress, we passed a bill to provide a clear jurisdictional guidance for both the SEC and the CFTC. I'd like to begin today with you, Ms. Smith. Can you explain how the SEC's currently determines what qualifies as a security and some of the challenges to this approach, and how we could maybe clarify that through legislation starting with this committee?
So today, since 2017, the SEC has been using the digital assets test as defined in Howey to define when a digital assets transaction is a securities transaction. That test from a 1946 case is a 3-part test. And one of the issues with using that test is that market participants have found it difficult to apply. In 2019, the SEC issued guidance providing some direction as to how to apply that test to digital asset transactions, but nonetheless, market participants have still found it challenging to apply. The second issue with using that test is that how we apply to primary market transactions, meaning a transaction between an issuer and an investor, does not apply to secondary market transactions between two different investors, and that is the bulk of the transactions that occur on crypto platforms today.
Thank you, Ms. Smith. That's a good 101 on this. And what we saw last time using this Howey test is that good innovators in this space came to the SEC with their ideas, with their recommendations, and their SEC chairman went into good faith meetings and used that information to aggressively, I would say, go after innovators in this space. Mr. Serra, you were at one of these meetings. Could you talk to us about how your experience went trying to share information with the federal government?
I'm sorry, but I'm not going to comment on any specific meetings or any advice that I gave to my clients.
Would you say that the government was helpful to providing clarity to you, or did they use information that you may have provided to further make it difficult for you?
So I'm not specifically clear about what meeting you're referring to. I can speak in general terms and say that it's been a frustrating experience for entrepreneurs that have tried in good faith to comply with the laws and have found that it's not really a viable option.
Mr. Ware, I'm going to turn to you then. When we talk about American innovation in this space, are we ceding this opportunity to other nations, other innovators offshore, because the federal government has made it difficult for those domestically to be competitive?
Thank you for your question. Yeah, one of the big issues is without clarity. It's clear that a digital asset is not a security without something more. On the day that it's created, you can wrap it in a security potentially. You can wrap it in promises that cause others to rely on those promises and expect profits based on the efforts of others. But absent that, it's not a security. Now, the issue is, it is, again, not a security at the outset, but innovators look to backstop their actions by, relying on Reg S, for example. And Reg S causes innovation to move offshore. It causes these tokens to be pushed offshore. That causes the protocols and the use of the protocols offshore. So innovation plus the use of this technology is all being pushed offshore, and that's one reason why of many.
So, Ms. Smith, I want to use the last seconds here. The CFTC maybe has a different approach. You opened up with how we do it on the SEC side. How has the CFTC looked at approaching regulating commodities like Bitcoin or Ether?
So the CFTC has jurisdiction over the futures and derivatives market. It does not have jurisdiction over the spot market. And so they don't have the ability today to make rules or regulations for that market.
Thank you, Mr. Chair. We need to fix and close that gap. I yield the remainder of my time.
The gentleman yields back.